Hello, everybody. Let me pause the music here. It is Red Ben, and it is April 4th, Tuesday, April 4th, 2023. If you want to get a hold of me on Twitter, it's at RedBenTrader. If you want to learn more about trading with a systematic process using a execution tool on the execution tool on Sierra Charts, you can talk to my coach, Simon. Give him a email. It's trade, the letter N, perform@gmail.com. If you let him know that you heard about our trading room through me, he will likely give you a free week in the room if you want to check it out. Kind of see what it's like to watch Simon's screen, see what his like morning routine and prep is like for a couple days, and kind of get a feel for how we do things. Feel free to email him. Otherwise, just watch and learn. This is not at all a marketing video. I just a lot of people ask me questions afterwards about how do I get all these tools and stuff like that. And it's the version that I'm using is slightly different. His is actually easier to read. It looks like this, and doesn't have as many signals. So whereas mine, I've added quite a few to it. So realize it's the same concepts, but just a couple extra signals that I use that the years and years and years of experience. It's very difficult to introduce new ideas to a system unless you're really struggling. It's often not a good idea to introduce new ideas, but some of us kind of enjoy. There's something I need to twist and tweak, and then the other thing that's really fascinating about like doing some of this work where we take a trade setup and say, okay, let's see how many times it worked, how many times did it set up, how many times did it work, what was its expectancy, and I use like a spreadsheet that kind of helps me with some of the math for that, but that I share if you want one. If you're in the room and you want that spreadsheet, let me know. I'm with you. If you're in the room, just DM me in our Slack. Words, finding a few setups that I know work in certain conditions. So for instance, like when we have a clearly trending market, let's say with momentum and direction is agreed upon, question of whether it won't, they won't work consistently because they're intended for use in a mean reversion method rather than a momentum method. So it's extremely important, in my opinion, that you know what conditions each trade setup that you consider taking, what conditions they work best in and what conditions they don't work best in, because you need, in my opinion, to be able to at least turn it on or off. I don't think everybody in that trades, especially retail traders, are for everyone it's not a great idea to have 50 different trade setups that work in 6 different conditions and each one is tweaked. Like I personally think that most of us do better with maybe 2 or 3, or just hunt one condition and learn expertise or specialty in trade setups. So having only where you can trade across multiple different conditions, but you only have a few high odds setups that you're really hunting for to actually push the button with. Most of the traders that I know do better specializing like that. Those of us who try to do a little bit of everything, like a jack of all trades, it's not that you can't be profitable, but it's a lot harder to be consistent if you have so many things you're juggling. So keep in mind as we go over some of this that a lot of these ideas, while they may seem like, I don't know, I haven't seen yet, but if it looks like it works really, really well, like realize that's just one day, right? It doesn't mean that they're going to work like that all the time. Past performance is not equal to future results, all that stuff, right? That's a real phenomenon, and it's something everyone needs to consider before they even think about trading or using like putting a new trade setup into their like process. Everyone needs to make that decision themselves, or with help from their financial advisor or risk manager or whoever. So realize that most of these ideas are still at the they're not fully tested yet. They're still sort of in the beta testing process where I may be with, say, like an Apex evaluation, but necessarily in a live trading account, at least not with minis. Maybe some of them are up to the point where I'll take it with the PA account, but with micros, just because I don't have enough data to really be confident they work across multiple conditions, multiple time frames, things like that. So getting that whole disclaimer out of the way, that right, that I'm not cherry picking, I'm not looking for just the things that are working. Like I said, those numbers might not tell me what to expect in the future, per se, but it does help me make better, like, informed decisions about whether or not I want to, whether or not I need to tweak them. Because a lot of times, your first idea might actually be mostly right, but if you have just one aspect missing, your expectancy can shift substantially. Such as if you don't know whether or not you need to wait for a retest or wait for a sign of aggression after a retest, right? If you don't know exactly where the best, highest odds point to enter the trade is, it's going to totally ruin your win rate potentially. Also, if you don't know exactly where to place the stop, if it's optimal to put it just 20 points away or maybe under the next swing low to the left, right? With the Apex evaluations, it's always nice that they run a lot of sales and reset sales and stuff like that. So like if I grab 4 of those for, like, I usually do 150K accounts, because that way if it ends up qualifying, I can more about that. Go to check out. You can ask me and I'll give you a coupon code and all that stuff. But it's the important thing to understand is that for the time being, most of these things just are still in the testing phase. So something I've been finding useful, that is kind of a new idea, because I don't like sharing too much at once. I think it's already overwhelming just looking at the algo, because it's got so many signals, and since you didn't build confidence and make sure that I know what I'm doing when I decide to implement these ideas, or if I decide not to. But one of these concepts, and this is particularly useful when the conditions in the market shift, which happens unfortunately pretty often. At least every quarter, usually you're going to have some sort of shift where the market used to be going straight up and now it's going sideways, and now it's going steps that need to shift. Or if it's your execution, or maybe your psychology or something like that, is actually to go in and look and say, like, well, did the ideas, if I would have taken the trade exactly like I'm supposed to in my process, just the way my plan says. Hi, Cat. He's been really noisy lately, you guys. I apologize. He's gonna bug us. But it's because I've been playing with him a lot. He's a kitten, and he's just, the more you play with them, the more they think they're going to play constantly. And I don't want to ignore him, but it's like, literally, if I spend 30 minutes with him, he wants 3 hours. So, what was I saying? I lost my train of thought. Thanks, Ronan. Yeah, thanks. Totally forgot where I was going with that. But one way or another, yeah, I think you get the point. When we have a shift in regime, one really good way to identify whether or not you might, that's what I was saying, to be able to figure out, is this a regime change where I should be shifting my process to different setups? Should I be looking for momentum? Should I be looking for mean reversion? Should I, right, like, which setup should I use? All those answers to all those questions, they're in the answer to them is found by doing this studying, right? And one thing I've found recently is that even though I take most of my trades that I execute most of my trades upon closes of the 24-tick Renko chart of the NASDAQ futures, that's I want to see the setup here to be regimes change. The result often is that the speed of the market changes. And when the speed of the market changes, what happens is the setups that were working beautifully, the setups that were working beautifully on the 24-tick at one point will now require you to zoom in or zoom. Hold on. But depending on the speed of the market, first of all, you have to think about whether or not you can process information as fast as it's coming to you. On the 24 tick, that's not a problem, but on the smaller time frames, it can be. But then you also have to think about the fact that if the market's not moving very much, or it's moving very slowly, waiting for the 24 tick to trigger may not be optimal. And then there's other situations where things are going so fast that you're actually better off going to the 40 tick and waiting for that to trigger before you decide on direction. So there are ways to sort of that if that has changed, if it didn't used to be like that, and suddenly that happens, that's really clear evidence that you are probably trading the setups that you shouldn't be trading in this regime. And if they were working, the regime has probably changed because that's just a clear way to find out. Now, sometimes it goes the other direction, like I said, and you have to go to a smaller time frame. So I've been using the 15 tick for a couple months, and I can trade this, and I'm getting better at it. But there are some drawbacks to trading a smaller time frame, primarily that you just have more noise in this. It just naturally you're going to get more setups and more triggers because there's more bars. And then the other real big drawback is that they potentially print so quickly if suddenly you get like a news event or something like that, do a trade and then stop out within milliseconds, right? Like it could happen. Whereas here, that's only going to occur during something like when a Fed speaker's going or something like that, right? Where there's like constant news changing. Other than that, you're not usually moving 12 points in an instant. That usually takes, depending on the liquidity, it usually takes a little bit more time and a little bit more auctioning back and forth. Whereas the smaller time frames, you can get what look like just massive drops in a very short amount of time, even without or lift when they work, no matter what time frame you're looking at. So as an example, if that's not super clear, let's say you have a momentum trade, right? And this momentum trade involves, let's say, like breaking over a yellow dot and then printing an aggressive bar such as a blue dot, right? So for instance, here it would be closing above that and having a blue dot, let's say. So on the 24 tick, it clicks there, you buy the breakout, and it runs, right? And then you get another entry on this one, and another entry on this one, etc., right? So just a simple momentum idea, and then your stop would go behind the blue dot somewhere, right? Probably a little further than that, honestly, because of the pink bars, but you get the idea. It would be somewhere in there. And then once you trigger again, you would be able to move your stop up at least to the previous bar until eventually there's another one, right? So we could just, that's like a, and then this one triggers, right? So now that has to hold, and then you're out. And so you got in down here on this close, or maybe during this bar if it was too fast to click the button, and then you're getting out up here at 327. So I mean, it's that, and that's not, I'm not saying that's typical or whatever. I'm just saying that's an example of a trade setup, right? Let's then look at the smaller time frame, and if we can find consolidation, tightening, and a breakout that look just like that, it should work there. It might not be at the same time though, especially if you're going to a higher time frame. It may not trigger at that point. You might need a bigger move. Well, in this case, we're going smaller, right? So most likely one of these breakouts during that general time should still trigger it, most likely. It doesn't always happen, right? Sometimes you don't get the setup, but often you will. So again, the setup was break over a yellow dot, right? I'm just going to back it up a little bit. Break over a yellow dot. And like I said, this is very simplified, but break over a yellow dot, give us a blue dot or some other sign of aggression, and then it's got to like break out. So, but one way or another would be what it looks like here. But you can see there it didn't set up. Then I would not call that consolidation. So I wouldn't count this. This just looks like bearishness, right? So I wouldn't say a breakout here would be bullish, but let's just see what happens here. You get a blue dot, it like closes above it, And not surprisingly, it fails because the conditions aren't the same, right? You would need that dot to be up here, for instance, after this period of consolidation. So here's this dot, and you close above it, but there's no blue dot there, right? So there's the blue dot. Now, does this look like consolidation? A little bit, right? This is looking more like it. Now, we haven't technically broken out of the range though, so your target would have to be this level because. So let's see. Oh yeah. So not surprisingly, they reject there, and then they print a yellow dot, and they do the exact opposite, right? That's a bearish setup, right? To get with the target being here, unless it breaks out, it doesn't. Now we have another yellow dot. We close above it, right? So our regular trade would be triggered with a blue dot or a sign of aggression like a star. There's the blue dot, so that would be your entry here, and your stop would go underneath. For a breakout is higher now because we've consolidated more tightening, just like we saw on the higher time frame. And then we do get the breakout here. So if this continues, especially if we get another sign of aggression, we should see a squeeze because we've seen this exact same condition in the other time frame, and that's what happened, right? And so it doesn't mean it's going to happen every time. There's our sign of aggression, the star. So that's our new stop, or if you weren't in the trade, you could enter there, and we should get, there's another one, some sort of squeeze like this, right? Now keep in mind, this looks but it's on a smaller time frame, so you just get more. Basically just gave up, but for some reason before that happened, like buyers didn't really want anything to do with it because look, it created this huge wick. It opened here, dropped all the way down here, and then sellers like just pulled their orders, which closed higher. So the volume up. I don't see this on other. I know this pattern, so I'm not looking at this at another. I don't know if that's actually what happens. They could bounce here, but usually, it's actually quite bearish if you can get a VPOC below this. So is if you bought this star here, right? If you bought this, great. If they show up at support, but what bulls are basically saying is we're trapping sellers down there. It's like, and then they gave up. Like, I doubt it. Maybe that was one seller, there was definitely an aggressive seller there, it says, but the idea that the sellers won't be able to release him is suspect. It's like after all this big move, right, where you're putting pink bars in with literally 0 wicks, and then maybe like 2 ticks of a wick, and then sellers just give up, sellers just give up, sellers just give up. All of a sudden, sellers fight back. They contest it, and then they're like, oh, fine, take it, right? That's usually a setup for a trap. And what they end up doing, usually, is they shift volume higher, and then they close it lower. Why do they do that? Because they need to get rid of all of their inventory, right? So anybody who bought down there sees this, and they're like, let's go, right? And the market shifts volume up, and then but there's no more natural buyers. The only buyers here were capitulating short sellers and people taking like they're buying to get out of their short, or they're buying with the intention of a very, very short-term trade that's extremely aggressive, right? And so when you see them do it, and they get price higher, but then it resolves lower, particularly when the VPOC, the little yellow dash or this yellow line, if this VPOC is above the high of that pink bar here, and then you lose it, there's a problem immediately. So you don't even have to leave your stop here, in my opinion. If you decided to buy this, if I decide to buy that, and I see this, and we go any higher, just mark it out. If it's been doing this, because look, let me show you where this does look good. I'll find one. A little bit of a tangent, but okay. So this is all like here. These wicks at support, that's fine. That is sellers trying to take support and then being like, damn, I lost, right? You get a scalp from that. This is support. right? Getting a wick down there makes sense if you're trapping sellers. But when you put a pink bar, a hammer bar that's pink, and you're not at support, you better hold that. Buyers better hold that, because if they don't, there were interested sellers in that wick that gave up. Particularly if you when you get a bar that's where the VPOC, these VPOCs are above this high, so they actually shifted volume above that, got price above it, but couldn't advance, right? They gave it everything they got, even got volume to shift up, yet price, so they advertised up here legitimately, but price responded with a rejection. That is a sell signal. That is not strength. So especially when it's followed, if you get a triangle in the opposite direction after one of these hammers, and it's not support, it's going lower. Particularly if it's been bearish like this, or if you're running into resistance, too. So, in fact, you could even do it here. If you think about it this way, on a higher time frame, this is probably a pink hammer. Here, we'll find out. Tangent, but set up out of this. So this does okay. So this is the quote unquote support that they're putting in there, right? And then the pink bars end in here, right? But the support is here. So on this time frame, you can see that it's not established support. They're trying to make it support. There's an aggressive trader here, which is what that is, but it's not. We're not back at support, right? We've extended quite a bit. Similarly, on this time frame, this one is a hammer that's not at a established support, right? So what we'd be looking for to be sellers would be volume to shift above this high, which happens here. So the yellow line gets above this high, but price rejects. Failed to get under this. See that? Now, price can visit under there, but you can't put any volume down here. They didn't even get price down there. They did get volume near it, though. See that dash is way down here? So if they would have just put price a little bit further, volume would have probably followed. And they would have gotten to this green area, which is a high volume area, and then probably rejected off of it and fell further down. Now, the thing is just because it didn't happen on the first try does not mean it's not going to happen. That's kind of the challenge with this. So what you need to do is you now need to think about the fact that this hammer has trap shorts in it that could get released if you can shift volume above it and then reject it. So we need a VPOC above it and then a break down below it. So VPOC above it, right? But then we need a break below this. And it doesn't happen. So it's safe. This became support, basically. It didn't look like it, but it became support for the time being. Same thing happened on the smaller time frame until they do it here. So again, it doesn't have to happen right away, right? But that hammer bar, it's pink. If it gets taken out on this time frame, it's bearish because these guys who gave up are now being told that that sell that you put in earlier, that was actually at a good price, and we're now trading below that. So if you get an opportunity to come up here, you should aggressively sell it, right? But they need to get, and they do. So purple bars are just buyers giving up, but no real sellers showed up here. So they did get VPOC below it, but then buyers suddenly up here with volume, and they are trying to shift that VPOC higher. If buyers can now reclaim this, it's not bearish, and they do. So now it doesn't mean it's going to go to high today, right? But it means that this level is being defended by bulls. The interesting thing is the exact same trade setup can still happen again. You can have a pink hammer, a bar above it, that has a VPOC above the hammer, right? And then give up the hammer. That can happen anytime. Well, this one's pink, so it's not perfect. We prefer it to be white. But you get hammer bar that's pink, bull bar with a VPOC above the hammer bar, and then they shifted volume higher, they advertised above and shifted volume lower, and then got volume below the low, not only of this one that matters right now, but even the one from before. This should be a warning sign here. This shouldn't happen if this momentum is still here. They shouldn't be able to, unless they can break above this. And they try again. And they break above it with an aggressive signal. And that's probably why this squeeze that's coming, I assume, is so big, is when you test it, sellers, you should reject and keep going lower. But the trade setup, ideally, happens up here at resistance to go short, right? You can't just short support. You need to wait for that pullback and confirmation. So if we got a short trade here, rather than a blue dot, if it rejected there, that drop is probably going to be pretty good. But when they can't even set up a short, right? I mean, technically this one, because you traded below it, they came up to resistance and then gave you a sign of aggression. You could short that, right? The only trouble is your primary target is support, so you'd have to take some profit here when it doesn't keep going, because a lot of times it won't, especially if you've been working off this momentum. Now, an easy way to see this, even without we're on the 24 tick here. If I go down to a smaller time frame here, in this general area, it should start to look like, because it's smaller, it'll look like sweeping moves from support to resistance, to the point where you might even be able to trade location followed by aggression and do okay, such as an apex trap. So you get an apex to the little flags on my algo. We trade above it, we close below it, and it goes lower. Where is it going to go? Support, right? On this tiny little time frame, it looks like mean reversion. It doesn't, right? Because it's going to sweep back and forth in this area. Can be found with the DVP tool. So we can draw the volume profile of the consolidation. Whenever we identify that it's consolidation, we can start where the consolidation move started and then extend until we break out of it. And what we're going to find is wherever that VPOC is going to be really important, a level of extreme importance. And until one side or another has fought over that, it's going to continue to mean revert. So what you'll see happens is once they break it, now this one's kind of unusual that it's so high up. Usually it's more inside, but once they to like, maybe you say that you weren't sure if this was consolidation, but at this point you know it is, right? Well, you could even just look at this consolidation and say there's the VPOC of this consolidation on this time frame, right? On the 24 tick. So on the if I can claim this and retest it on a smaller time frame, it's 13,250 or so. Then as long as like all of that still holds, it should continue that direction. So there's my 13,250, give or take, right? And like I said, we would have known about it. How early could you have? Where is it? How early could you have? There it is. How early could you have drawn this? Okay, so it starts to shift. They can't establish above it, and then they retest it to the downside. That would also be okay, right? So you would say, I'm going to mean revert and trade back to the center of this until one of these sides takes that level. Man, I can't use my mouse today. Okay, so we would just kind of wait here and just say, okay, well, no one really owns that level. Oh, nope, they did it the opposite direction. So now aggressive trader there. So now if we hold this and go lower, you'd think that sellers are taking it. But we have to reject it up there. So let's see what happens up there. They don't reject it. Instead, they put a buyer on there, right? So now that level, now this happens to be right at the level. So you could say claimed it, tested it, reclaimed it, and retested it. But I kind of prefer them to actually break out first. There. So they break beyond it. So now if this is defended, like that, right? They can't break and hold. They can't put any volume, basically, underneath this aggressive trader here. You could wait for the triangle if you want to be sure. This is our first sign of momentum. So we would stop selling this level. Don't take an apex drop now, right? Whereas before, the apex drop to the short side worked just fine, right? Apex, get above it, close below it, sell. And then this one might have been a tweezer bottom, but it's basically the same idea to the long side. I'm going to stop doing that now because they've claimed this VPOC with a... So it's between this bar and this bar. So they're printing this purple bar here. And on the 15 tick says, this is actually confirmed to break out on the smaller time frame. Can we target a resistance on the higher time frame? And I'd say, oh yeah, for sure we could. We've got a voodoo range level here. We've got a high of day here. And my stop can actually be our time frame if I want it to. So in this case, because the setup is on the small 5 or whenever you're, whenever I'm comfortable getting in, because that's the confirmation comes on the smaller time frame. And then I'm seeing the big picture on the higher time frame suggests that, hey, if there's momentum on the 15 tick and we continue that on the 24 tick, we could break high day, right? And so I'd want to take profits around the voodoo range level if it gets there, right there. So most of my trade is off here, and now I just have runners. But I've now, remember, my let's say I had a 10-point stop, right? And getting in at 54, and I get out at 78. I mean, like that's better than 2-1, and on futures that's rare. So as long as that on the smaller time frames, if it sets up again on the smaller time frame like this with another sign of aggression, and nothing's changed on these on this, there's no reason why you can't take it again. And that also means that for this trade, for those runners, once you get to your first profit target, I wouldn't do it right away, but once you've gotten to your first profit target, in my opinion, I can put my stop, I can trail my stop behind these entries. And these are just adds. You just add to the trade, right? Add to the trade. Because nothing's changed. Target was 75. I could, I might only have 2 contracts at that point. I might want to add another one. And then, but now that stop would have to go here at 80. And there's going to be times where it comes back, tags it, and runs. So that's the risk. But lost the stream. I don't know if I lost. Let me see. I thought I just saw my internet go. We'll see. What I've been doing lately is kind of taking this to the next level. And in addition to looking at the 15 tick, which, like I said, I can usually read, but if we go too fast, it can be very hard to read. I've now been experimenting with this same 8 tick. I think I might have lost the stream. I do not recommend that we trade the 8 tick. And this is a note to myself as well as to everybody else. I'm not intending to trade the 8 tick, but the 8 tick help warn me about conditions that are changing before a trade set out of this. I might have lost my internet. Let's see here. Let me see if this is live. Oh, looks good. Okay, good. Phew. All right. I think we're good. So it keeps saying reconnecting, and sometimes that means I lost internet. So I guess we're fine. Okay, so the 8 tick is going to be usually too fast to trade. Make that perfectly clear, right? But note that same idea that triggered here on the 15 tick. And like I said, you probably could have taken the trade as long as it's slow enough to process. It's not a horrible idea. You just have to have it has to make sense on the bigger time frame. The direction needs to be determined from the higher time frame. So on the 8 tick, we're going to have the same kind of idea, right? But rather than getting triggered on the 8 tick, we're going to take the 8 tick as our first warning sign that something's changing. So I'm not trading off of it. I'm looking at it and saying, am I still clearly unidirectional or clearly mean reversion or not, right? Just like we did with the 15 tick. So here, remember, we were mean reverting, right? And I said at this point, we probably would have known that and might have drawn the profile and found that 13,250 level, right? So let's do this on the 24 tick. So now let's go to the 8 tick at that same exact time with that same level drawn, which, like I said, could have probably been drawn here, let's say. Once we've swept through it, returned to it, now I bet most of the volume here. Oh, not yet. I didn't include this. So eventually, this volume shifts a little bit. Somewhere around here, right? So now what we would be doing here, we'd be saying, okay, it looks like mean reversion. I want to know if one side, just like I did with 15 tick, does one side clearly own 13,250, and are they able to retest it and reject it and then continue on their way? And should I not be trading mean reversion here, right? Now, notice that the same general trade setup still works. So it's not that you can't do this. It's just that it's usually too fast and there is a lot of noise. So apex trap brings us back to the midpoint, right? It's mean reversion. You've got yellow dots. Yellow dots get broken. Like this. Usually that level gets defended, if not this. Sometimes it's got to sweep first, but when you break over those, it's usually defended. Whereas here, blue dot, broken down, right? Lost it. On this tiny, tiny little time frame, they're probably rotating down, right? And they'll usually 10 move, but on this tiny little time frame, that's only 10 points. So do you get 1-to-1? You do, right? But you better be quick if you're gonna, because this could happen in a blink of an eye. It doesn't always, but it can. Especially overnight, it's much more tradable in Globex and even London. But I don't recommend anybody do it, including myself, because there's a lot of slop. And losing 8 points might not seem like a lot, but like if you do it over and over and over again, you could easily take 3 stops in a row, right? But what I am saying is that if you saw this and you weren't sure if it was mean reversion, well, now you have a hint that it might be, right? And so then if I go to this time frame and I was trying to decide whether or not I can take this trap, but the 8 tick has given up that blue dot, I'm way more confident now taking the mean reversion trade because the 8 tick is technically already set up, and if I'm only targeting 10 points and I can put my stop 12 points behind me, I'm gonna be fine doing that, right? Whereas if I didn't have this set up on the 15 tick or set up on the 24 tick, because it's set up here too, right? Here's the apex trap at 47. See, so it happens right here. And look at how much time you technically have. Like, you know about this here, the breakdown. You have a whole nother bar, all this entire auction, right? I don't know how the time basis is, but overnight, it's significant. And that would tell you, hey, that 24 tick setup, if you weren't sure if you can short here, the 8 tick says, go ahead. There's momentum in the 8 tick. And if there's momentum in the 8 tick and I have a target for a mean reversion trade on the higher time frame, it's probably going to work, right? So here it triggers, right? And it goes lower. And so let's look for the same exact thing at 50. Like I said, we'll take this one off. And what you'll see is, so the first time, they can't get any volume above it. Nothing going on there. Can't get any volume above it. Can't do anything there. Okay, they finally get some volume above it. above it? Do they break out, retest, and put an aggressive trader there? They break out, they retest, they put an aggressive trader there. Right? So if I was trading this time frame, I'd say, hey, 13,257 is my entry, and my stop is 13,250, or maybe a couple points below that, and I'm going to take a 8-9 point loss every time I'm wrong. Otherwise, I'll try to get 10 points going to the upside, because if I was just trading this time frame, right? Well, on the higher time frame, what we see is at 57, well, at least 59, we're coming right into this resistance, right? So we really haven't gotten a confirmation. But then we look here and it's like, well, we did get a blue dot, right? We did get this little retest, and we knew that this level is important. So you'd say, well, what does the bigger time frame look like? It's like, oh, well, the bigger time frame actually is getting a dot too, right? So once that dot's in, maybe we're good, right? So maybe I don't take it at 57, but I can probably take it at 59, right? And then it's back. And so now, if you miss this, and you missed this, right? Now you'd have to say holds on a pullback. Now that one, I don't know if that actually paid. If you would have taken that at 59, does that not pay? Did that stop technically? Yep. So that, if you tried to take the long here and you didn't get out in time, which is the problem with doing this, if you didn't get out in time, you would get stopped. The problem here is we're running into resistance. See that? That would be the reason not to take it. If you have a 12-point stop and you're 8 points from resistance, that might be a good reason not to take the trade. But you can see on this time frame, that setup looks sweet. It worked just fine. It's just that that's only 8 points on this 8-tick time frame, right? So you'd have to observe it here, and you'd have to notice that that it's not working, basically. And so they come down, they try to hold it, they reject it. So whatever that idea was, that this was going to bounce off and rocket on the higher time frame, it's dead now, right? And now it could actually set up the other direction, as long as you thought it was bearish in the higher time frame. For the other direction, reject here, retest X. Your short is at 47, right? And your stop is at 53, let's say. So on the 15 tick, do we have any reason to think this should be a short? I don't see one. There's no aggressive trader. There's no level here. The only thing is the blue dot. They're testing below the blue dot, but they haven't even put volume below the blue dot. So in my opinion, not a great idea. Here, it's back at 47. So it's basically this. So on this time frame, you have the apex trap. On the 24 tick, it makes a ton of sense as long as you thought you could get a decent return, right? So if you're okay taking it to support, looks like an okay deal. You just had to be okay with getting out at 35 or whatever. So if you want to take a 10-point stop, a 10-point trade, it makes sense, and I'm pretty sure it works. So you take it here, and you'd know to target about 10 points, right? So 48, you'd want to get 38, and you're out. Wait. There. Ugh. Wow. Yeah. Barely. I don't know. Is that it? Oh, no, it keeps going. Okay. So here's where you're exiting, most likely. You're like, okay, that's good, right? Because I only took an 8-point stop or whatever, or I had an 8-point risk, and I got my 10 points, and I've got support here that we just can't assume it's just going to break, right? So, hold on real quick, guys. Someone at the door.
Motion detected at the front.
Let's see what's going on here. How can I help you? Yes. Okay, yeah, I'm in the middle of a meeting, so I can't. If you want to leave like a piece of information on it or whatever, I'll check it out. But I'm in the middle of a meeting, unfortunately. I'm not sure. I'm here. Just, I guess, come back if you want. But if you want to leave something, fine. I'm not really interested though, so feel free though. Yeah, like I said, I'm in the middle of the meeting, so I certainly can't talk about it right now. I can't even look at my calendar at the moment. And like I said, not real interested in solar. So thanks. All right, bye. All right, sorry guys. Where was I? Oh, hold on. Okay, so all right. I don't remember where I was here. Sorry. Um, let's see. Oh, I know. I said we were coming in a sphere. Um, and so our level's still up there, right? We gotta make our way back there. Okay, so now we've gotten back to the level, right? And so we just asked the same question. Do we know who owns the level? And the answer is, well, at the moment it looks like bears are trying to take it. Can they resist it and reject it and retest it? And so far, no. We have an aggressive trader on the bull side trying to reclaim it, right? So they do. They reclaim it. Now, technically, we want it to come back and test there to be certain. That would be much more comfortable, and it's especially true on the smaller time frame. So we come back in, and there is our retest and our aggressive trader right there, right? Perfect. And so again, you go through the same process, and you'd say, well, do I have a reason to belong here? And we say, oh, look, I'm retesting it on this time frame too, and I got a speed trap. And that looks pretty good. This was a tweezer bottom. I'm at support here, and I've got volume shifting up. And look, I've got a blue dot here. Maybe it is bullish. I've also got a pretty good target here, right? So all of the same, it's the same thought process. It's just another chart, right? And the other little hint here is, look, you've got a star down, meaning that someone aggressively tried to push through to the downside there, and they were unable to do so. They got price down there, but volume didn't go any lower. See, the volume was here, it went down, and then price rocketed up, and they never were able to put any volume down here. So that star down basically gets trapped, right? And while it might be a tiny little time frame, those trap concepts still totally apply, completely and totally apply. So you could even look. The cool thing about the trap concepts is they tend, when they work, they don't always work, right? But when they work, they tend to get pretty big extensions. Oh shoot! Sorry, I keep on getting interrupted. So the it's sometimes worth using, even on the smaller time frame. It may be worth hunting those trap trades, as long as you're aware that you really should have a higher time frame reason to know the direction. So as a super simple example, so I think I've made my point with the retest move. These X's, in addition to stars, can get trapped pretty easily if there's momentum in the market. So all you got to do is I'd have to draw a line here on the first one, and then I'd say, okay, well, if we can develop volume above this and then retest that level and go, it's probably bullish, right? Well, then we put in another one. It's like, okay, well, same thing here. If we can get volume above it, test it, probably bullish. Come back here, same thing. Now, notice we haven't done it yet, right? So there's no reason to be bullish until here. If you were like this, there's no reason to be bullish yet. But if you can get over it, you know, it's trapped. So we'd wait, we go lower. Now I get an orange bar. That one can get trapped too. This guy too can get totally trapped. That one can get totally trapped. Now, to be trapped, we need a white or green bar with a VPOC above the high. That's a pink bar. That's a pink bar. Doesn't count. There. All right. That is the trap getting sprung. It's not necessarily your best entry point, but if this now holds and especially if this holds, but primarily it's like you could put it like here, let's say the bar that's like adjacent to the trap bars. If this is now support, they can test underneath it, but they need to bounce right away. But if this holds, it's bullish. Now, sometimes you don't get the retest; they just go, and in that case, you would have had to be pretty aggressive. But notice here, on the higher time frame, we knew about that trap at 13,249. We knew he was trapped. So this one was still forming at that point, right? Well, here we had the tweezer bottom. We had a green bar that was followed by a triangle, and I talked about in my last video. One of the setups that I've been watching for, and am watching for, and because it works, is if you have a yellow dot and you get above it with a bar that's not pink, get VPOC above it on the bar that's not pink, like this. It basically it confirms this support. It confirms the support, and we should expect that it gets defended. When it does, and it produces a triangle, particularly when it's green like this, that triangle, even on just that setup, is a good entry most of the time. Usually to get back up here. It's a scalp. It's not a going to high day every time, but it usually is. If they get it over, if they break over the yellow and they get VPOC above it and they pull back and they hold this, it usually does lift at least 10 points. So I already could have seen that here, but let's say I missed that move, right? Let's say I didn't take it, and I was wondering if there was a chance if I should wait for a pullback, or if the chances of a pullback are actually pretty low, and that I might want to like chase it a little bit, right? Is it worth chasing? So the smaller time frame will tell me that, because like I said, here is where I knew about it, was here on the higher time frame. Well, if I jump down to the smaller time frame there and I'm like, do I have any reason to think that this is like ready to explode, or should I be expecting a pullback? Well, then when I looked here and I would see, oh wow, I've got 3 aggressive traders selling below us, and we just closed a bar above it. This could explode big time. And what's really cool is on this small time frame, if I got in at 50 and I think I can get 20 points, my stop being at like 38, that's not that big of a deal, right? That's not that severe. So even if it came all the way back in and it did retest this trapped area, since I don't really expect them to go much lower than that, it should still work, right? And it does. So that setup works rather well, particularly when you have this alignment of the multiple time frames. And like I said, you can do this with the 80 tick, the 40 tick, whatever you want. I'm just using these 3 because I find that's about what works for me, is 40, 24, 15, and 8. But I am not triggering trades off the 8. I'm just getting those little hints. So like let's use another, like, remember we talked about the hammers that are pink, right? Let's do that with the 8 tick. Let's see if we can figure out, maybe we already did this, but I don't think we did. I think we did it on the 15 tick. So here's a hammer that's pink. We get VPOC above it. If we give it up, it's dead. Here's a hammer that's pink. We get VPOC above it on a bullish bar, but it's pink. Not as good, but still possible, right? Well, they hold it. It's probably still bullish, right? Because they defended it. Okay, next. Pink. Hammer. Need VPOC above the high. It happens right there. It is pink. It's not perfect. But now if we can take this low, it's got the potential to reverse. They defend it. What do you know? It's still bullish, right? Here's one. Same thing. Here's one, right? Now this hammer doesn't get a VPOC above it right away. They test below it first. See that? They test below it first, but they can only get a VPOC below it on a purple bar. So this is defended. So that's bullish until they give it up. Okay, oops, I missed one. Hammer. VPOC above it on a white bar. White or green is way more susceptible to being trapped. So now someone really actually came in there and bought it. It wasn't just sellers giving up, like someone bought it up there, right? They put volume higher, they put price higher, advertised above, and boom. Now, it's not bearish until they take this hammer back, which happens right there. We get the confirmation aggression with the yellow dot, and we shouldn't be bullish anymore, right? It doesn't mean we should short because we're on the 8 tick, right? But we know that the chances that this continues higher have just decreased substantially. And the good news is we're only 12 points from the high at this point. Here's the high. They put in 2 bars. Not even, actually, because this triggered here at 37. So it triggered here at that little dotted line. So it didn't even finish printing this plus. So it was just beyond this, right? On the higher time frame, we're literally up here in 37. We haven't even printed this. We haven't even printed a down bar yet on the 24 tick. And the 8 tick is already warning us that, you know what, this might be done. Which is, in my opinion, pretty cool, right? Should you just blindly short it? No, I shouldn't, right? I mean, you can if you want, but we might want to start looking for short setups now that we've gotten that warning sign. So for instance, here we could say, well, if we trade up here an apex trap down, I could probably take it. If we trap a buyer like this star and get under that, we can probably take it, right? So all of those setups start working again. Whereas back here they might not have because you had nobody trapped, right? But now this on the smallest time frame, you've got them trapped, and now they especially when they come back up and they can't get it back. I don't know if they do. Do they reject it? Nope. Oh, yes they do. So they come back up and they reject it, right? Especially that second one. And I'm talking about it's this here, and then they do it again, see? So this second one, we saw this earlier too, right? It took 2 tries, 2 attempts. So they did it here. You got the move down, right? And that was like the first like kink in the armor where like someone finally got a, they got a blow in, right? But it's not necessarily the top. Then, but it tells us like shorts might start working. And then suddenly they get it again at the white bar above, VPOC above, and then VPOC below. And in addition to taking out this one, the tall tale sign that this might have reversed is we've now taken this one out again. So in other words, bulls owned it here, bears owned it here, bulls took it back, and bears reclaimed it right away. So like bulls had a chance to push to high day or to push further, and they couldn't even get there. And they immediately reject it. That's usually a problem. That's usually a problem. Now, in this case, I don't actually know if that's the case here, but this retest and reject with aggression is usually the signal I would look for. I'd prefer it to be on a higher time frame though. So something like this, where it's like resist, aggression, triangle down, purple bar. Dot comes right there on the 24 tick, speed bar, all of that, everything's there. And then they've got the star that they could trap, which could produce a much bigger drop. And there we go. You get your short. And it keeps working. And now remember, the same exact thing can happen on the opposite side. Or it can happen again to the same side. So you do have to be careful. Like if you put in a hammer bar that's purple, If you would have gotten a white bar down here, oops, down there, that could have gotten trapped. When it's purple, the chances it gets trapped are not great. But see, this goes in, and then they push a VPOC above it, and it starts to look like on this time frame that it might be getting bullish, right? But again, they'd have to hold they'd have to reclaim this one because that's resistance now, right? So if you think about this hammer being resistance, since they pushed above it, gave it up, tested it, rejected, that's resistance now. So I don't know why, even though this might be bullish, I don't know why you buy it since you don't really think it's going to go any higher than that. That's resistance, right? And not surprisingly, they do reject. See? And then it's out of there. So you have to be careful. If you're too zoomed in, you'll flip back and forth over and over again and miss the big picture, right? But if you were looking at the big picture, trying to decide whether or not you should be bullish, here, when the 15 tick takes it, you'd be like, oh, it was bullish. It's like, oh, there's a star at the high with a blue dot, and we clearly got a VPOC below it. We have to retake that to be bullish. So let's not buy this one or this one. Let's wait till we get a VPOC above it, see if it acts as support, and then we can be bullish again. I'd much rather miss this 10 points, right, than be the guy that buys this. Now, the cool thing is it also means, because of that, that if this sell signal comes in, we can probably take it immediately. Because we know it should, when they can't get any volume above this, see how close they get, but they can't do it, even on a bear bar? Like, that's rough. And then you had this little second attempt that's followed by a plus down. That's almost always a good short. Now, like I said, we knew about it, the potential for this to turn around way back here on the 15 tick, right? And then the 15 tick said, oh, be careful, it might go bullish. But the big time frame said, no, that's not going to happen, right? Right here, it looked like it might turn. But like I said, we had this resistance to contend with, so I wouldn't have actually taken the trade. Look at how much information we have on the 8 tick. And how many times, if you were just watching the 8 tick, you might have flipped back and forth. And this is why you don't want to trade it on this time frame. But it gives you a hint. So look, purple, bearish bar below it, VPOC below it. It's probably bearish, right? This time frame says you can trade it right there, and you get a nice little drop, right? But now that's resistance. Okay. Then they have a pink one, right? The pink one gets a VPOC above it that's not pink, which is dangerous if they take out this blue dot. They come up to resistance, they reject. You really don't know for sure it's bearish yet. They try to defend it. It's pretty standard. Come up to resistance. Like I said, you really don't have any reason to think until they take this one out on this time frame. There's really no reason to think, oh, this was pink too. So this is also vulnerable, right? So unless they can take this one and defend it, it's bearish. That is pink. Let's see if they do it again. Oh no, they just rip it down, I bet. And there's VPOC below it. So if you didn't know if it was bullish or bearish, now you know. On this tiny little time frame, you had evidence early that was the level to watch for the and then you get the retest and the confirmation there at 17, right? Well, you got it here too, and it's bearish, and you had something to trap. Well, oh wait, this one's even better. See this one? Hammer, bear below, reject that, and it's bearish. Boom. Right? So, and then they do it again. Because look, to be able to be bullish, so this, I don't want to make this too confusing, but usually we're looking to get VPOCs above pink hammers to look bearish, right? But if there's already momentum in the market, in other words, if we've already trapped a guy above a pink and gotten below him, we already think it's bearish, right? For them to turn it bullish again, sorry about the fight or flight, right over my house. Give me a second. Wait, they're fast. If we have purple bars and bearish bars with VPOCs below that, and those purple bars are hammers, that's resistance. And all of our shorts should come out of there. I've talked about this setup for weeks with the double purple. But the truth is actually works with single purples too. You just have to make sure they're hammers. But then they do it again here, see? So it's not bullish. A good way to think about this, it's not bullish unless they can take this back. They gotta beat that. Or put in another one and beat that. After trapping someone below it. Not just get over it, but put a VPOC below it, like that, and then bounce. But that's another one. Another one. Okay. They couldn't put a VPOC below this, but they did put a VPOC below this one. Right? So this guy could get trapped. He's trapped if they trade back up here, and we know it when the retest holds. Otherwise, it's resistance. They can't break over it. It's resistance. Right? And still bearish. And so you wouldn't be taking apex traps or 2-bar combos or anything like that on the higher time frame until this resolves. And like I said, you can do the exact same damn thing on the smaller one if you want. And the chance that you'll have it wrong is higher. So look, okay, here's the bear. We got VPOC below it, right? So we need to get above that and hold it for a retest to be bullish. But then, like I said, it could flip and go the other direction. Well, they put in another one here, right? But they can't get anyone below it. So it doesn't really count. Okay, and then they do push up above it with VPOC right here. So if they would have held this and bounced, it could have been bullish. And so you might have missed the short trade if you were too focused on the 8 tick and were expecting a buy here. Thankfully, it didn't show up on any time frame. On any time frame. It just dropped. But you would have missed the short if you were too focused on trying to get a retracement. If you would have seen the bigger picture, you'd see that there's actually another one up here on the 15 tick. Right? So the chances that you're going to get much of anything is not very good. But if this would have triggered bullish, it probably does come back up here and test this resistance. It just didn't trigger, right? So that setup can literally be found anywhere. But the key is it's a slow developing setup. It's not break it and get long or whatever. It's break it and start looking for setups. So like this. Oh, we didn't get below that one with a VPOC. That one doesn't even count. Okay, pink. Get above it. Give that up and it's bearish. VPOC below. Yellow dot. It's already bearish. You got a yellow dot. You can take it. Right? Otherwise, if you didn't have the yellow dot there, this is where you might want to come into the smaller time frame and say, well, did I reject off a resistance? Did I have a setup there? Oh, I did. So let's go ahead and take the triangle down. Because if this yellow dot wasn't there, that could get you into the trade. Just like the yellow dot could get you into the trade if you didn't see this. Right? But it's really good when they all line up like this. They all say short. They all trigger basically the same point. That's what you want. Right? So that trade idea where you have the hammer and then you trap a pink or purple hammer, you trap a preferably non-pink or purple bar beyond that, and then take out the hammer. And then retest the level. That slow developing trade works really nicely with these choppy markets. That's one idea that's been working. Another idea that's been working. Here's the open. Another idea that's been working. If you know the direction, and this works on every time frame. Not every time, but it has the potential to work on any time frame. If you can get a box, yellow or blue, going in the direction of the trend, so it's bearish, so I want a yellow box in this case, that level should be defended on retests if it does retest. And if you get a yellow dot, you can get a short. Now this yellow dot appeared immediately and it was really bearish, so it just dropped without setting up again, right? But like I said, if you weren't sure whether or not you wanted to take this right away or wait for the retest, all you got to do is go to one of these smaller time frames and find another setup and just be like, oh, well, there's this hammer right here. Have we gotten above it? Yeah. Did they hold it as a support? No. Did we get below it with the VPOC? Sure did. Well, then let's just take this as a short aggressively. Because if this is setting up, we're probably going to get 10 points. And you do. Right? So that's one setup we're going to look at. Now, like I said, it could also happen on the other time frame. We might see it. Now, if it's against the trend, here's a blue one, a blue box, and we're bearish, right? You don't want to buy that. The only way you're buying is if you get a triangle up after this holds. It needs to be a triangle up, and it needs to hold. So if this is a triangle up, and you have a location reason, like it's, you know, chopping and you're at support, sure, that might work. Other than that, don't mess with it going short with or going in the wrong direction as a trend, with the exception of the squeeze or the rug pull, which is when you break it with a purple bar and it happens relatively quickly. You can get a big rug pull. Now here, that's not really fast enough. You want to print like one bar and then boom, cut it out, right? Like drop it. That's what you want. Now these will trigger on the smaller time frame as well, or they will set up. I mean, they just won't work quite as often. So and then the other one that I've been using is the dots. I talked about this in my last video. If you have a small bar, preferably that's purple, and it basically doesn't have much of a wick. Yeah, I'm finding it can have a little bit of a wick, but the smaller the better. And it gets a dot, and you're going in the right direction of the trend, you can probably chase this. Sometimes you'll be wrong, and when you are and it immediately reverses, I can reverse as long as I get a pink bar breaking it. Like that. So this is usually, now this one might fail, but that's usually a reverse right there. So the stop for the entry short would have been here. Now it's blue, so it's not a good idea to take the short, but the long is when, especially when they're blue and they're purple, the blue outline, purple on the inside, yellow dot, break it with a pink bar relatively quickly. If there's any chance of this reversing, that's gonna work. In this case, it doesn't, right? It's on the 15 tick. Your hit rate's not gonna be as good, right? On the bigger time frame, it didn't set up long. You did not get the pink bar breaking above it. You got a green bar breaking above it. So if you were cautious, you'd wait for it to confirm here with at least a triangle up. But yeah, it technically stops here for the reversal. Usually that means you're a little bit early. And like, yeah, this is exactly what normally happens. Is this becomes the low, and then it goes. Yep. So that's the only trouble. It can be pretty frustrating when you don't know if it's gonna be this one or the next triangle. You just don't know. It's usually the first one. Sometimes it's the second one. So if you take the stop, you have to use the stop, right? Don't just hold it. But if you get the stop, then don't be aggressively shorting again. If you got the reversal signal, chances are something like an apex trap or some other setup is probably going to work here. Maybe getting like a hammer bar. And if you don't get it, I mean a hammer bar trapped, if you don't get it there, you can look for it here on the smaller time frame, right? So you can say, well, I got this nice little star here. Maybe I'll stop that out. Or there's a dot here on a blue bar. Maybe I'll get above that and then set up on a pullback, right? Well, you need a VPOC above this for that setup on a bar that's not pink. That's right there. So if I now get a pullback and then a green bar followed by triangle up, we're good. Unfortunately, it happened one bar late, because really this is your preferred entry. And the problem was the VPOC didn't get high enough on this white bar. Now that rule is just my own rule. It's not something magical. It's just you have to draw a line somewhere. So you can see this was within like 1 or 2 ticks from qualifying, but it didn't. The VPOC, the yellow dash or the yellow line, is below the white line, so it technically would miss for me. It's just no trade, right? That trade setup just didn't fire, and that happens, right? Sometimes that happens, but you did get an apex drop. Apex, trade below, come back up. Now, am I going to take it right here? No, because on the bigger time frame, it doesn't look like anything, right? But if I've got the apex drop on the smaller time frame, I had this reversal signal here that stopped out and usually goes once I take it back. I'm now on guard for a run, and I might consider taking the next triangle. If nothing else, I'm looking for this to get reclaimed, and when it does, I want to find a pullback that I can buy. And in this case, it was just a wick. But I bet on a smaller time frame. Yeah, on the smaller time frame, right? We got green bar, triangle up on a pink bar, and that one works. So that it gives you a good example of like if you already knew you wanted to be long there, it was just a matter of finding the setup. You could, you'll find it. You'll get the confirmation you need if you look close enough. So okay, so look, pink bar with the dot, and it's yellow, right, which is the opposite of blue. So if I can break that down with a purple bar, it's probably bearish. It doesn't happen. It's probably not bearish. And so instead, you could probably buy the reclaim, right, or what it holds. So this one, the blue dot. So same thing. It's not pink, but if we break that one down with a purple bar right away, it's probably good. Otherwise, it's bullish, right? So on this time frame, you kind of thought it was probably bullish, and then here, same thing. If we break above that in a pink bar, it's probably bullish. Otherwise, it's probably bearish. Doesn't immediately break. It's probably bearish. Same thing here. Immediately breaks. No pink bar. Not going to do anything with it, right? And it just doesn't trigger. It just doesn't fire. This one says probably bullish unless it breaks. Yellow, right? Box, but it's bullish, right? If I can break this with a pink bar, it's probably bullish. There we go. Oh no, didn't break with the pink bar. Pink bar, no, the wrong order. I needed it to be white pink. So this might actually be the top. Let's see. Oh, pink bar. There we go. Now it broke. That should work. Yeah. Let's say it was delayed. We got it. The pink bar broke over this high here. Here. Confirming bullish. And like I said, on the bigger time frame, you'd have to decide what you want to do with that, if you want to take the blue dot or what. Okay, and then on the higher time frame, do we have anything? Not there. Just looking for any of these setups, and then I'm going to show you one more, and then we go. Okay, here's this. Break under that with a purple bar and it's bearish. Otherwise, it's probably bullish. Okay, so see how they defend it? And they defend it. So these are all signs of bullishness. Usually I need the triangle up to confirm. So normally that would be my entry if I'm trading the 15 tick, right? But otherwise, if I'm trading the 24 tick, I need like a level and a setup here. Okay, we got a blue box here, right? And like I said, that's usually bullish, but I really just want to see this level hold. If they trigger like that in the smaller time frame, I'm probably just chasing it. But if they then pull back and hold this and trigger long, that's the preferred setup. And that just drops. Now, that's interesting. So that one just straight up failed on this time frame. Chasing this was not such a good... Oh, well, I had resistance there. So not such a good idea. I wasn't paying attention to that. This was a big up move, and this was the high. And so if you're getting long here with a stop here, that's not good risk reward. So that's why it got stuck. It just ran into resistance. Okay, so this one doesn't trigger, except for continuation lower. Looking for boxes and dots primarily. I'm seeing some of the hammer candle setups, but I don't have to point every single one of them out. So I still got one more setup I want to show you that's new. But we'll focus on these two primarily, see if we can find a couple more. There's a dot on a small bar that gets broken by pink. That's a good setup. And it fails. 15 tick. Not going to have as many winners. This is better when this is purple. Definitely. But that looks right. Just didn't work. And on the higher time frame, it was bearish. Right? So, but again, when it doesn't work, usually the low is coming. It just needs to set up again. So probably this lifts. But I don't have a setup, so I can't just take it. Let's see if they defend the low. They do not. Okay, there's another one. So this is sell unless they break out the pink bar. Just make sure I didn't get anything on here. Nope. So they break it with V pocket needs to be above it. That doesn't set up. That's not right. There's another one, not purple. Yeah, just bearish. There's another one. Okay. That one's blue and purple and white and yellow dot, right? It's pretty vulnerable. I'd prefer a pink bar, but I don't think I got it. Yeah, and then they get you the dot. That's your last chance, probably. Yep. Okay, there's your box, right? Do I have any reason to think it's going to get away from me? I mean, it's starting to look kind of bullish, right? I might want to chase it. Oops. But technically, I want this to be tested. So when they pull back and they give me green bar, triangle up, that's really safe. Your stop needs to go below this because this is also a good entry. It's still valid. It's still valid. This is also a good entry. Yeah, like the problem with the choppy markets, you guys, is that this takes like 15 minutes to resolve. So if you were, this is why you don't want to do the chase here, why you don't just want to buy it. Wait until they test the level and continue it. And that's the way to go. Otherwise, watch for the slower developing setup so you don't have to sit here in your trade. Now notice we had a pink bar that was a hammer that got a VPOC above it. So really our stop belongs behind this. That if this holds, it's still bullish. So once I see this and they pull back and they're trying to hold that level, I'm basically thinking as long as I can put my stop down here at 218, I just want to get long, right? As long as they don't take this out and take this out, I want to get long. So I could buy this, I could wait for this, I could buy this, I could wait for this. It doesn't really matter. The point is we need a target. And on the bigger time frame, we may not have a target. Because while this does look like it's trying to turn, there's a lot of resistance up here. See how they get stuck? That's not what you want to see. That's not what you want to see. Definitely not. And if you weren't sure, jump down to the smaller time frame and say, well, do I have any reason to be bearish up here? Right? Like, should I be nervous? Are there people getting trapped? Well, you didn't have any reason to be nervous until that. And now it's bearish. Oops. Right there. This smaller time frame says that's resistance. Don't short it, but be careful now. And so on the higher time frame, it goes low. So you didn't get much of a retrace there. You'd have to be pretty aggressive to catch that. This is kind of a cool setup where the star and the X get trapped. Right? But you didn't get a dot on that time frame, but you did here. You got the dot there. So that was all right. Here's how the reversal is supposed to work. Dot on a purple bar, especially when it's blue. Break over with a pink bar. VPOC above the high. This low should be defended. Triangle up. That usually works. And today it failed. I swear I did okay today. Thankfully, most of these are still in beta testing mode. Remember, when that setup fails, the low is usually close, right? And that's good for me to know. Sometimes these things just take time, multiple times, especially on the 15 tick or the 8 tick or whatever. Here's the boxes on the smaller time frame. Again, I would not usually trade this time frame, but when they set up like this, you can basically say if I can get a VPOC above this or a VPOC below that, I know which direction it's going, then I just need to get a good entry. So right there, it's like, it's probably bearish. So, and that is here, right? So if I was buying that aggressively and I saw this on the 8 tick, I'd be like, damn, I should probably get out of this trade, right? Now, sometimes you don't get a chance, but you might want to, right? Now, the funny thing though is that because it's such a small time frame, it can flip, right? And in this case, they did get VPOC below it, but they did not defend the level. So it never set up short. Yeah, and it just went. So that's the thing. It's not always going to be right. And the higher time frame said, remember, and it looks like it's reversing. They just needed a couple more people to be trapped. And on the highest time frame, you had apex trap, right? Apex, trap underneath, close above, with a star. So if you had any reason to think that this could be an area that you want to be buying, the highest time frame is the one that matters the most. And the highest time frame is saying, hey, this might be the low. And the 15-6 said, well, I thought this was the low, but they traded a little bit below it. Maybe we should be looking for apex traps. Whereas the smaller time frame said, on this tiny little time frame, this looks like it's going lower. But when it doesn't, pay attention, right? Because everybody got trapped down here who's trading this tiny time frame. They just got smoked. And the higher time frame said low. It's the low, right? Well, that probably means this move could be explosive, right? So you get an immediate squeeze. Okay, box, right? So we can put this line here and say if that level gets defended, it's probably bearish. It's not defended. It's not bearish. Oh, wait. Yeah, not bearish. Instead, they give us a pink bar with a dot. That's bullish, right? On the smaller time frame, if we weren't sure, we probably have a hint down here. See how this traded above and then got VPOC below? And we know that that's usually bearish. When they can't defend it, it's not bearish. Someone's trapped. Because that setup usually works. So if it's not working, something's up. And it's because on the higher time frame, they're all trapped out here. There was an apex trap that totally worked. They tried to defend and they completely got smoked. So, like I said, when these don't work, expect a bit of a squeeze. Okay, it just chops back and forth and back and forth. So you just gotta be really careful not to take too many trades, you know, in the middle of the range. But like, if you mark this level off and you're like, hey, as long as buyers don't give that up, it's bullish, you might have been able to catch a trade here or here, right? See, I hope that makes sense. Because again, if it's bearish, you're going to see them come up here, reject, and go lower. Well, if they can't do that, and the higher time frame's bullish, and it looks like the low's in, it's probably in. Here's this trade, looks bullish. You get the dot, it pulls back and holds it. Boom. Right, and now, like I said, on the higher time frame, if you didn't want to trade the 15 tick, all of those things don't have to be trade entries. They can just be like, this is not bearish. So when you see like ring with a star, don't just short it, right? Because it's not bearish. And like this, like that you might not want to short triangles until that changes, right? Eventually it might change, but these red triangles are going to be death traps if the higher time frame is bullish and the lower time frame is bullish. You can't take those aggressive trades because they're counter trend now. Okay, so test. So now look, we got under a blue dot and we got a yellow dot. That's not bullish, right? So something's changed on this time frame. On the smaller time frame, you were trapping orange bars, you were trapping X's, right? They put in a this was old resistance, but they put in a hammer bar, traded above it, and gave it up. Smaller time frame is bearish. Higher time frame at resistance. Star at the top, traded below. They're all suddenly bearish. Yeah, we're going lower. Right? And so when you see yellow, blue, blue, don't get confused, right? And I need to remember, don't be confused. If everybody says it's bearish, my primary objective is getting this trade to work, right? Which is get it back up here, defend the level, and reject it. That's really what I want here. It doesn't set up that way, but if it would have, that's what I wanted. Now look, on the smaller time frame, it's set up here, saying that this level could be defended, and that one didn't get tested either. So sometimes unless you're aggressive, you just won't get it. We've seen in other videos, other reviews, that the plus sign coming after the box when it's already determined which direction we're going is a pretty clear sign that it's ready to go. And then in addition, if you can't get a VPOC above these yellow dots, but you trade with a VPOC below the blue dots, you pretty much know it's over. So here, you know for certain. So at this point, if on this higher time frame, if you have a sign of aggression like a triangle down, you're probably done. Going up. Because again, all of the time frames are aligned. Okay, here is dot, right? No pink bar above, dot. They break above it, and then dot. So one of these is going to fail, right? One of these is going to fail. So as long as this holds, it's bullish. As long as this holds, it's bearish. Now, can they get under this? Nope. And then they put another one. Now this one's a hammer. It's a little scary. Because if this gets going, it's done. And they can't. See how they hold it? So where you actually get long is up to you. But the idea here is this is a negotiation back and forth, trying to figure out who owns this fair value. But you don't really want to be trading back and forth in here. You just have to have a line in the sand. Be like, look, as long as that gets defended, higher time frame's bullish, I'm going to be bullish. Whereas if you're the other way around, you're like, higher time frame's bearish, I've got a target way lower than this, and I've got this level here, and I think if they give that up with a bar that's not purple, it's probably bearish again. Well, they give it up with a purple bar, they give it up with a purple bar, they reclaim it, they give you a blue dot. There's no sign that this is going lower on this time frame. See that? They can't get under it, can't get under it. And then on the higher time frame, it suddenly says blue box plus. It's probably bullish as long as this holds. Right there. If we get a triangle up next, should be good. Nope, no triangle up. And it doesn't set up. So if you were aggressively taking the plus sign, you got hosed because you were taking it into resistance, which is what I was talking about before. That seems to be a theme here, that it's very easy to miss in choppy markets, that you may get the signal, but if you have nowhere to go, there's nothing to do. The location matters more than ever when it's choppy. And even though this looks pretty strong and you expect this to hold, the real trade doesn't happen until you get a triangle up over here. The first triangle up, that's a squeeze. You'd have to have someone trapped to take that. And so even though everyone's aligned here, and it looks like it's going to hold on the smaller time frame, well, it does, and it gets to resistance, and they put in box, box, box. Someone's going to lose, right? One of these is going to get wrecked. So whichever one gets defended is the side you want to be on. Okay, they test below it. Do they defend it? They got to defend this. They do, right there. Speed trap, triangle down. It's bearish, right? And again, smaller time frame. It's going to be a setup, but you have hammer, trade above, give up hammer. It's bearish. Highest time frame. It's bearish, right? Boom. You get the move. Everything works together. Now, you don't want to get this like trapped, otherwise it's going to go higher, right? And then you can look here and be like, well, here it's just this one. And then here, I took this with calls, so I know this set up long. Just trying to remember how it's set up long. Was it just a dot? I thought there was something more than that. I guess it was just a dot. I thought there was a hammer here. Oh, was it on this time frame? Hold on. I'm not seeing things straight. Because I took this with calls at the end of the day. Pretty sure this is the end of the day. And, yeah. And, like I said, I had a reason for it. And it wasn't from the tiny time frame because it was calls. So it was, oh, it might have been a higher time frame. Otherwise, I would have taken no futures. Here we go. Yeah. Okay. Here we go. So on the higher time frame, the one I'm looking at, we've got a dot here on a triangle down, and then you see the box here, right? So when it's bearish, defend it, and then they go lower. Well, they tried that right here. They tried it. They put in a dot on a triangle down, and that's usually good to go. It should have gone lower there. Lots of volume, everything was good, right into a previous day's low. They gave a pink hammer at support, followed by another pink bar. So all they needed to do, in my opinion, was close one more bar bullish that's not pink, close above this, and this guy, and this guy, and this guy are all going to get trapped. And they do it. And so I bought calls here because I wanted to hold them overnight. Because I thought these sellers were expecting a lot lower, and we're now trading above them. I don't even know if we're going to come back to test it. And I think it's bullish here, personally. Now, how bullish, I'm not sure, right? Because there's trapped buyers right there. So it might not go very high, but the potential is there for this to be the low. Sometimes these get taken out, right? It doesn't have to work, but the potential was there for these guys to get trapped and for this to squeeze higher on the higher time frame. On the smaller time frames, what that looked like was just the dot, I guess. It was really the only clear way to get long, other than breaking a dot. But then you usually need a blue dot. You get long awfully late there. And then here on the smallest time frame, there is this dot and this dot. So you break above yellow, print blue, and that's usually pretty good. Right? And then if you wanted to look at the A tick, you've got a dot here that breaks, but they don't print blue immediately. It prints one late. And this one is where it triggers. Break yellow, immediately print blue. So at 86, you get the entry. And then it takes you 20 points higher. Okay, so let me introduce one more idea. I'm going to drink real quick here. One more idea, and then I'm out. I got other stuff to do. Oh, I forgot to check this. Okay, so we talked about the hammer, the hammer trap with the pink and purple bars. Something else that is kind of cool, when you get these what I call mini bars, where there's barely any wick, and especially when they're pink or purple, it gives you a hint for which side may be giving up. That's basically what that might mean. It doesn't mean it every time, but it might mean that. If you see those in both directions, so a pink and a purple nearby, particularly like purple at the bottom or pink at the top, like this, and then you see the other one relatively soon after. So for instance, purple at the low and then pink mini bar. If you can get above both of those, this one and this one, if you can get above it and get VPOC above it on a bar that's not pink, just like that, that's normally how mean reversion periods go. You print, like, buyers give up, and then buyers show up, and then sellers give up, and then buyers win, right? That's how it normally goes. It's very interesting though. There's not a whole lot of, I don't have a whole lot of ideas for how to turn that into a trade other than just to know that's what's to expect. But what is interesting and has potential for a trade is when this doesn't happen. For instance, if you get purple and pink and nobody shows up there, they push up there and no one's there, and they defend it, right? That and you're not able to get above it, that is a lot more actionable. This is a lot more actionable because you got up there and you couldn't defend it. I mean, sorry, they defended it, and so it's bearish. Whereas here, you printed purple, you printed pink, you kept going higher, right? The most recent one produced the move, right? Whereas here, you got purple, you got pink, you couldn't go higher. You actually gave it up, and then they defended it, right? So here it would be getting under the purple would be the setup, and then here pink, mini bar, purple mini bar, right? Pink, purple. What we should expect is lower, right? That's normally what's happening if they are flipping sides, if we're mean reverting, consolidating, going back and forth, right? In a range. That's normal. You're probably coming to support and it's just rotating. If instead this doesn't happen and you get a purple bar here or just a green bar, it's not yet bearish, right? So if this bar is missing and instead you just go purple, green, it's going to squeeze. Now this time we had this bar in between on this tiny time frame, unfortunately, that kind of, it makes us miss the move. But on a bigger time frame, you have purple mini bar, pink mini bar, right? So normally we should be going higher, right? We should have a bar above that with a VPOC above it. When it doesn't happen, something's up. And you get the turn down, right? Because you got purple, pink, rejection. So you get a move, right? It's only a scalp. It's only going to come back to here, right? There we go. There it is. So that's what you'd expect there because they defended this. This guy is the hint. It should have been higher. It should have been easy to get him higher because of that. So here, purple mini bar, pink mini bar. Too many damn drawings. Okay, purple, then pink, then we get above it. Nothing to do. It's bullish, right? No setup anyway. Let me go back and I'll show you this. This works on all time frames. You're just going to see it a whole lot more on a small time frame. So let's try it on the 15 tick. Okay, here's the open. A little hard to read the 15 tick on the open, but we'll do it anyway. So, oops, I went too far. 8:30 central. Okay, pink, pretty small. We prefer it to have an even smaller wick than that. But pink, then purple, right? We should assume lower as long as they don't defend it, and it goes lower. So nothing to do, unless you have another setup. Purple, we need a pink, and then we need to defend it. Pink, right? Now, if bears defend this, and we get like pink bar star down, or something like that, it's bearish. No VPOC above. The VPOC is inside the range, so still a possibility. Here we go. Now, there's no real setup there, unfortunately, on this time frame. But if this would have been like pink bar star or pink bar speed trap or orange bar triangle, this triangle usually results in lower because they defended it rather than letting a VPOC get above there. Now, sometimes you'll get the setup on a higher time frame like this. So this is a good point, a good reason to be aggressive on this bar that had a star, an X, and a box, and a dot. Already, if you thought it was bearish, it's probably going lower. But rather than waiting for the traditional pullback and rejection, you would have had to be aggressive here on the triangle or on the box or the X or the star, whatever you want to say it. And the way to know that is that on the smaller time frame, they were defending this mini bar pair, right? So this one's got a hammer, so that's just resistance. Purple, pink. If they reject this and go lower, it's probably bearish. See that? Pink bar, star, lower. That's how it usually sets up. Okay, no purple bar down here. So purple, pink are like lined up, right? So our guess should be higher as long as they can push it up there. Okay, they do. Now it doesn't have to go straight up there. It's not a reason to buy, right? But it's certainly a reason not to be short. And it does come back into the area and then runs. That the only way you might be able to take on position is with a dot. Or an X. I see X's work a lot too, like in that condition. So see how there's no purple bars anywhere, no purple mini bars anywhere. It's going to be really hard to turn the market without buyers giving up. So no purple bars. We're just chilling long, right? Until they trap somebody. Purple bar. There we go. So pink bar, pink mini bar, purple mini bar. They're right across from each other. As long as you trade below that, there's no bull bar to buy. Okay, it's purple. That doesn't count. You need a bearish bar. See, no bearish bar below. This is probably buyable. If you want to wait for the triangle, you can be sure. But most likely they're defending that, and it's going higher. Cool, right? Okay, that's pretty small. Purple bar, pink. VPOC needs to be above this. Otherwise, we should be watching for a turn. They get pink. This VPOC might have been above it. So it'd be that dot that might get you long. Otherwise, just don't be short. There we go. VPOC clearly above it. Nothing to do. Okay, purple bar at the high. That's a little concerning for sure. Especially if you can get a VPOC below it, right? So like, you might, and it's a star. So if you were long like that shouldn't happen, really. If there's a lot of momentum in the market, we're probably coming back to test this. It might make sense to get out, but we don't really have any reason to be selling because we haven't trapped anybody. So it's probably just going to pull back. Okay, pink. So you could say pink, purple. Those are both mini bars, right? So if they would have defended this, you might have gotten along. They did not defend it, so nothing really to do. I'm not going to buy this one. Not saying it's not going to work. I just don't have a setup for it. And we'll skip the other one. So there's pink. I don't really see a purple nearby. I'm not really going to count any. Oh, they might actually reject it. Damn. Okay, so pink mini bar does not produce an extension with a VPOC above it. I guess the closest purple is here, but I like to have them closer together. And then pink bar, orange bar, lower. So that kind of works. Pink, purple. That's not really a mini bar. Pink, higher. It's not bearish. See that? They can't, sellers can't get anything going, and they're not defending when they do have an opportunity. Pink mini bar, higher, it's not bearish. Pink mini bar, higher, it's not bearish. See the difference between the hammer pink and the mini bar pink is extreme, right? The interpretation of this getting lost versus this getting lost is really big. You can give this back and have no problems at all and just keep pushing as long as they don't drop anybody important. Pink, purple, okay, now it should be bearish, right? So if they defend this with a star up or green bar up, you can probably take the triangle up. And they get a bearish bar under it. So now we know to not be looking long. It's too bad that they did it this way on this time frame, but because it didn't really alert you very early. But you could technically take the yellow dot, it seems, most of the time. So like purple, no VPOC below, purple. If they twist this with star up, green bar up, and then triangle up, no, fair. And no dots, there's nothing to do. Waiting. Those aren't really mini bars. It's just, we're just going to assume it's just going to stay the way it is. Okay, pink. No purples. I mean, if they don't, if the buyers don't give up, it can't go lower. So, when you get pink mini bars and there's no purple mini bars, you better hope they defend. If you're bearish, like, you probably shouldn't be, because sellers are giving up and buyers aren't, right? So there's our hammer candle, and then VPOC above. So now that is your support, and there's your entry if you want. Okay, there we go. Purple, that's not really a mini bar. I guess it might be close enough, but purple would mean if they defend this, it's bearish, and they do. See that? So even though you didn't have I guess you don't necessarily need the pair. You just need to know the direction you're going. So if you go left to right, this makes sense. But the idea is the purple should naturally result. The purple bars should naturally result in lower. When they don't, it's time to buy, and the pink ones should naturally result in up in higher, and when they don't, it's time to sell. Here you have a hammer followed by a bar below, so this is resistance. No, didn't really have an entry on this time frame. So see how they came back to this hammer, and then they gave purple bar star. That's another way to do it. Okay, mini bar, here, right? That pink bar can't produce another bullish bar that's not pink above it, right? No VPOCs above it that are not pink. It's probably bearish, and pink bar, orange bar is probably the way to do it. So they chop it, or they chop you up in here because they're probably in a gross area, but it's technically bearish. See that? Hard, but that's correct. No, like, you got a pink mini bar, can't get above it. It's still bearish as long as they keep defending that. The problem here now is you've got the purple hammer bar, and we can't get any bearish VPOCs below it. So break this. Some resistance now is here. Break that, it's bullish. Right there, bullish. Now, you don't have to buy it there, but it should be bullish. Wow, they swept all the way under. Did I miss something? Did they get a VPOC below it? Oh, it's purple. No VPOC, no VPOC. Pink mini bar above. I see. So what I missed, it should have been bearish. It signaled bearish. I'm sorry, signaled bullish here, where they can't get it lower. Here. Looks bullish, right? And you can, there's no purple bar star, but you can, it makes sense that you'd think it's going to bounce here. But then when they do mini bar up, I don't think there's any reason to, let's see. Am I doing this backwards? Shouldn't that be bullish? Yeah, that would be bullish. Yeah. Okay, good. So we thought this was resistance. Then it looks like it's bullish. Did they run into another resistance? They did. So this mini bar, interesting. This mini bar couldn't produce a VPOC above it, and even though it left and came back, it's acting as resistance, and therefore maybe you can sell it. I hadn't even thought about that. If the mini bar is near the top, like this, well, if the mini bar is near the top and then the pink is all they can do above that, or if the mini bar is literally the last bullish bar in the rotation, it's not only immediately, it's also the next time they come up to test it. If they still can't get a VPOC above it, that resistance is still good. That's fascinating. I hadn't actually thought about that before. So in this case, that might be one of the reasons why this bounces, is they couldn't get a VPOC below, on a bearish bar, below the mini bar, here or here. Okay. It's a tiny time frame, but technically that's how it works. Okay, pink mini bar, can't get above it, probably bearish. See that? So pink bar, orange bar works. Now that was at the end of the rotation. Let's see if that area holds. Look at that. It does. That's pretty cool. That is pretty cool. Okay, purple bars producing sell bars below it. No reason to think it's bullish. But then they do mini bar at the bottom and immediately bullish bar. If they get a VPOC above that, it's been defended right there. So this is one of the plus signs. You can probably go ahead and buy as long as you don't have any reason to think that this is going to be resistance. And this probably breaks. See that? Ah, mini bar, bar above. I have no reason to be bearish. Mini bar, bar below. I've got no reason to be bullish. That's too bad. So that one just didn't work out. It gave you the 10 points. It just didn't. Well, let's see. Technically, your stop goes down here. Yeah, it's just the fact that the higher time frame is bearish. Ah, mini bar, no bar above. So on the higher time frame, you knew it was bearish at 31. You knew it was bearish here on the higher time frame. Even though you got the mini bar with the bar above here, on the higher time frame, this was actually a mini bar. That's fascinating. That's pretty cool. So this resistance is probably solid if we return to it. Let's see. Mini bar, bull, bar above. See that? So mini purple, bar above, triangle up. That's probably good for a long up to resistance. This one now got a bull bar below it, bear bar below it. So I wonder if it'll act as resistance. It tries and fails. It does try though. So they come up to here. I expect this to act as resistance. Right there. Mini bar, no bar above. At resistance, star down. It's going lower? No. So this one fails. Oh, it runs into this. This was resistance, and now it's support. Ah, damn. I didn't even realize I got to think about that. That's interesting. So the fact that it was reclaimed here, and it's now support. Dang. So you really don't want to do this if it's really tight. This is not a good. This trade setup will work better in trending markets, not in tight choppy markets. Like I said, it's just a new idea. Okay, that looks like a mini bar. They can't get below it. Do they give a triangle? That's probably good. Yep. See that? Mini bar, can't get below it. Star, and we already had support. That's probably bullish. Now, I bet this is a mini bar in a higher time frame. Oh, no. There was one here. And they can't get VPOC above. Orange bar. Boom. That's probably good. Yeah, the X's in particular are really good entries for this. But on that tiny little time frame, it only gives you 6 points. Mini bar, can't get below it, right? And it's bullish, so just take that for a scalp. Now, notice they can't get VPOC above the high. Purple, that's a hammer. They got below it. It's probably bearish unless you can get over it. So this is resistance now. That would be your entry short. Be careful. Mini bar, need to get below it with the VPOC. Purple bar, purple bar, purple bar. There. Now they got below it. Wow, that kind of sucked. I mean, there's just nothing to do there. I don't think I can sell that. Technically, but I guess it does work. Okay, mini bar. VPOC above it on a pink bar. Nope. Can't get VPOC above it on a regular bar. This is the pairing that I saw all the time in my reviews last week. This seems to produce trade entries when you know which side works. Because now you've got both of them working, right? So you need a bar that's not, so bar that is not pink or purple going beyond it, right? Is the sign that one side is taken over. And so you would expect bearish there, but then they put another pink bar. Yeah, it's bearish, I'm pretty sure. See that? So it's not an immediate sell. But if this would have had a star or something, it's a good, kind of like the box trade. It's a good place to, the yellow and blue box trade, it's a good place to set up. So this is just regular bullish. Yep, and dot does work. That does seem to work often. It's just, you don't want to do it when it's choppy. Pink bar, mini bar, pink mini bar, no VPOC above on a bullish bar. See that? So if I don't know what to do about the fact there's two of them. You might need to trade under this one with the bar that's not purple. Yeah, see, this becomes choppy because you had two. That sucks. And then you can't get under. Yeah, it just gets choppy as hell. And see how it's all pink? So if you start seeing this, you either have to go to a smaller time frame or a higher time frame and be like, well, this might be the low. Let's see if I can buy a pullback, right? That's the way to think about it. Don't try to follow it back and forth in a 5-point range. You know, let it get out of here or go to a different time frame. Pink mini bar, can't get above it. Orange bar, like that would suggest we're going to support. The problem is support is probably the last mini bar that got a white bar above it, which is there. This mini bar got a white bar above it, that becomes support. That is probably viable. Oh, I'm wrong. You need the triangle there. Interesting. Because of this, it's flipped it. They tried to save it, but it failed. Oh, geez. They got under with a purple bar only and then went through it. So mean. Okay, pink, bearish, right? Probably bearish. Problem is, support's right here. I don't know if they're going to go much further than that. Yeah. It's just shitty because it's tight. Okay, there's the pink followed by white above. So then dot has been working. Yep. Yep. Purple bar, can't get below it. Green bar, higher, and it's bullish. Okay, here we go. Pink bar, can't get above it. I wish that was a star. Yeah, kind of good thing it's not, because that's going to fail. Purple, right? Like, no real aggression. No mini bar. Interesting. I'm surprised this wasn't pink. Was this pink on a higher time frame? Nope. Wow, that just let go. Oh, pink, white above. It's bullish. We want to pull back to buy. Right there, probably. There. Triangle up. Be conservative. Wow, it doesn't work. What happened here? Oh. Purple bar gets VPOC below. Now it's bearish. Interesting. I'm surprised that didn't work. It's just too choppy to do it on this time frame. That's too bad. That's tricky. Purple bar couldn't get VPOC below, right? Am I wrong about that? Purple bar, mini bar. Oh, VPOC below right there. It's bearish. Shoot. I was looking at this, and there's no dot, to be fair. There's no dot to get you long up here. But then they do purple bar. They get VPOC below on an orange bar. And so that gets defended. And then this one you need to be aggressive with. And if you looked at it at a smaller time frame, you saw them try to break out of here, but they couldn't get VPOC above this, and they dump it. Damn. That's tough, to be honest. That is hard. Okay, mini bar. Can't get lower. Triangle up. Now, does this hold its support? Probably not, because they got a pink bar, orange bar. Going lower. This holds. This breaks. Yeah. Mini bar with a dot. Probably going higher. Mini bar. VPOC above. VPOC above, it's bullish. We want a blue dot right there. Ooh, fails. Okay, there's a blue. That was the first blue dot that failed after getting a white bar above a pink bar. That's good to know. Did that pink bar have a setup? No. Darn. Yeah, we didn't really trap anybody. That's too bad. Okay, here we go. Mini bar, higher, triangle up. Does that work, bull? Yep. Cool. That's how it's supposed to work. Okay, mini bar, can't get lower, bull. Mini bar, can't get higher. Now, it's not bearish, right? So if you get a VPOC below that with a triangle down, it's bearish. Right there. Okay, bearish. Cool. Nice. Right there. Purple bar, mini bar, get VPOC below. Yellow dot should get a short, doesn't set up. Pink bar, white above. Blue dot should get us long. Doesn't set up. Purple bar, the bar below. Yellow dot gets us short. There we go. Nice. Gives you something. It's definitely a scalp. Purple. Then mini bar, trade above, bullish on triangle up. Pink bar, VPOC above, blue dot is a long. Blue dot, same thing. Blue dot's a long. Yeah, so even if you got chopped up a bit, eventually you'd catch on. Okay, so that's that. This has already gotten 2 hours. I gotta go. Hope this was useful. And yeah, like I said, if you want to get a hold of me, here's the contact info. And I will be back next time.